Hey, good morning. It's your boy Ivan Sasan, host of Startup Area Show, the number one real estate investing show for startup angel investors. Actually, we have a guest today. His name is Max. I'll have him introduce himself here. Let me see if I can figure it out. Oh, here it is. Hey, Max.
Uh,
How you doing today?
Perfect. Hey, how are you? Thanks for having me on. Happy to
Yeah,
be here.
thank you
Yeah,
for being here.
yeah,
And
absolutely.
really, I want to get started with like a personal question as opposed to I know you have a background in startup angel investing and real estate, but really a personal question first. Um, Currently, why do you do what you do on the personal side?
Um, so I probably, if I were to answer this question properly, I kind of have to take it all the way back to how I got started.
Okay.
My family was one of the first Filipino American families to have their own brokerage, real estate brokerage,
Right.
in San Francisco in the early 70s. They were founded by my mother and my aunt,
Yeah.
female founders, in a business that was traditionally not held by Filipinos. And so
Correct.
I've kind of lived this life as the son of entrepreneurs, the
Hmm.
nephew of an entrepreneur. So as I've kind of gotten older, I've seen that there's a lot of opportunity to give back. So part of
Yeah.
what I do, not only just advising companies or investing in companies, is trying to give back to some of the organizations or the
Right.
entities that helped me along the way. So a
Hmm.
big reason of why I do this is because I see that there are a lot of amazing talent individuals that don't necessarily have the kind of support that they need, and I try to help them, whether it's money or time or my network, and it's one of
Correct.
the reasons why many reasons why, but that's the primary reason.
I know we're on the month of November, but you remind me of
Sure.
Christmas every time now, because you're just the art of giving kind of person.
Well,
You know.
I mean, there's trust me, there's giving is a big aspect too, but I mean, we also want to identify founders that are successful, and
Correct.
we've done fairly well identifying some startups that have done well. So I
Right.
can't
Right.
say that it's all charitable, but I can tell
Yeah.
you that we there is a good balance of like what we try to find in a founder. So giving is a part of it, but also being successful and turning a profit for all the stakeholders is important to us too.
Correct, correct. Oh, well, thank you for sharing that because
Absolutely.
I'm sure there's the very charitable part, and then there's the I want to make some money too and actually give
Mm,
back to the community. So,
sure.
um, I see here on LinkedIn, let's see here, you're a real estate entrepreneur, advisor, and a venture fund manager. Can you talk a little bit more about your background in both real estate and startup angel investing? I know.
Yeah, yeah. So I was again kind of taking you back about 15 years ago. I was really at my family brokerage, and
Okay.
I was doing that. I got licensed in 2000,
Yeah.
and I was selling traditionally, but
Yep.
realized all of this that there must have been like a better way on
Yeah.
how to transact. During those times, the information about properties weren't online. It wasn't aggregated
Hmm.
onto a kind of a centralized database or a
Right.
centralized site. 2006 was the year that Zillow, Redfin, Trulia, they were all born in that year.
Hmm.
And so there was this movement to have a lot of this information um, online. So I got bit by the startup bug, and I left my family firm, and I joined a company that nobody wanted to work for called Redfin. And
Oh, okay.
Redfin at the time was just based in Seattle, and they didn't have an operation in San Francisco. So
Hmm.
they were looking to build a team in San Francisco, and I was one of the first agents that they sought out, and it was it was an amazing experience because we were like the pioneers of how we thought real estate was being done,
Correct.
and just coming from my background as a son or the nephew of an entrepreneur, it just fit right in with my DNA.
Gotcha, gotcha, gotcha. Well, that's actually great. You're the first that actually came from like a um, uh, real estate tech slash maybe even fintech kind of background, and so amazing to have you here. Um, let's see. I know we talked a little bit more about more on the angel side. So,
Hmm.
I mean, in your
Yeah,
background, you already
sure.
know
Yeah.
you already know the benefits of diversifying in real estate, but for those that do not know, where goes the difference between startup angel investing and real estate?
Yeah, this is kind of an interesting topic. I was at the Inman conference actually 2 weeks ago. It was
Okay.
hosted in Las Vegas, the October
Yeah.
26th to 28th, and It was one of the first times that a lot of like my colleagues and previous connections had gotten together and seen each other in a conference. And
Right.
how great is it to be back in Las Vegas to like with thousands of real estate practitioners that are doing tech and all this. And and I can tell you that like diversification is an important aspect of real estate. So
Hmm.
it was one of the topics that came up was why aren't more brokers investing and starting technology based companies in real estate? And I can
Right.
tell you that there's an absolute huge opportunity for it. In addition to like not only like multifamily and commercial and investing in those types of asset types, but
Hmm.
there's also the private equity side that brokers who by and large would qualify to become accredited investors because of their income and their net worth.
Correct.
They can diversify their portfolio by,
Hmm.
investing for the future. Identifying a company or a product that they use or that they support or they're knowledgeable of, and not they don't just have to purchase like real estate single family residences to rent or just apartment buildings. They can also do like private equity angel investments. And that topic came up during this conference with a number of my colleagues. And I think that's the reason why for 2022, we haven't announced it yet, but we are going to be launching our first venture fund to
Okay.
support like diverse equity inclusion founders that we feel are underserviced or unnoticed, in an effort to kind of like show this ecosystem and democratize private equity investing to accredited investors who normally were in this type of asset type.
Got it. Got it. And from the 2 weeks ago conference that you went to,
Mm. By the way, you
that
should
was
go. You should go one of these days. It would be great for you to see kind of the different companies and kind of see how it all. It'd be a good experience for you. So next time there's one happening in New York
okay.
in January, but the one that happens on the West Coast it used to happen in San Francisco, but now they moved it to Las Vegas. But next
Okay.
time I'll send you an invitation. You should come.
New York, January 2022, right?
Yeah, yeah,
I'm just
yep.
writing that down. And
Mm.
so, from those conversations out there, do you see startup angel investors being aware of these real estate opportunities, or where's the barrier there? Or
Yeah, that's a good question. I tend to think that they want to be involved in these type of investments, but just what you and I talked about when we first met was, the biggest challenge is like the education, right? Like educating them and being able for them to be knowledgeable about these types of investments. It's not that they can't understand them, it's just that they're not exposed to them and they don't have the opportunity to see them. They're not able to compare and contrast. They're not able to see what the true benefits are of these types of investments.
right?
So, and a little bit more about my background.
Hmm.
Even though I grew up in this real estate family,
Correct.
I had some time doing. I worked essentially in the financial industry, and I worked for a firm called Franklin Templeton. I
Hmm.
managed a family fund, small fund. It was a little bit less than 32 million, but I did it right after college.
Wow.
So it was, one of the things that I'm very proud of in kind of my development.
Hmm.
But in addition to that, it allowed for me to have this foundation to talk not only about real estate, but other asset types, so stock, bonds, mutual funds, and then now like fast forward to here we are today, like NFTs, crypto, blockchain. There's so
Yeah.
many different asset types that people can get into, and what the biggest barrier, to go back to your question, is really the education. Is really
The
just kind of
education.
educating the accredited investor community that these types of opportunities are there.
Okay. Okay. Thanks. Thank you for that. And I know you mentioned blockchain earlier, and I have a really big question on that because I know blockchain is going big with NFTs, cryptocurrencies, but in real estate tech, there was a summit about like a month ago that one of my mentors had talked about, and the only thing that's missing in blockchain, as far as like real estate transactions, is the signing of physical signing of the title. Is that correct? So, what are your thoughts on blockchain real estate tech now, and how do you see it
Yeah.
in the future?
So I actually wrote an article about blockchain, and how like some of the benefits of blockchain, specifically the technology of blockchain, the ledger, and like
Hmm.
what it could be used in real estate transactions by itself. And I wrote this back in 2017, so it
Wow.
wasn't that early, but it's early enough that I can talk about it now in 2021.
Right.
And I can say like there like my rudimentary understanding of blockchain was back in 2017 was, it can improve transparency between like inspections. It can improve transparency between deed and title restrictions,
Correct.
CCNRs, bylaws. You can put them on the blockchain. Now it can be public, it can be accessed, and then it's not behind a firewall. It's not sitting in someone's desk on a piece of paper. It's essentially there for all people to have access to. So I think that's one aspect. Is the transparency concept. I think to your point about like signatures, the challenge
Yep.
with signatures is that each state has their own nuances of how they treat what a viable deed is, or
Hmm.
any of their like closing in different states, like they require closing attorneys. Some don't. They all require some form of notary.
Correct.
But digitizing notary is kind of an interesting thing. I think there's some states already that are moving in that direction. California is not there yet, but I think that's the movement, especially since 2020 and the pandemic. You saw that real estate transactions were still happening, but people were less likely or less willing to go into an office, or
Hmm.
or visit somebody's house because of this, the fear of getting exposed. So I think that's kind of moved the dial forward and the need for it.
Hmm.
Um, if you think about anything in real estate or technology, you have to imagine that any of the technology is really based upon trust. So,
Correct.
whether it has to do with Uber or DoorDash, the whole idea is like 7 years ago, you and I would be apprehensive of jumping in somebody's car,
Yep.
and a stranger's car, that we don't know, and
Yep.
that we text essentially, and to
Hmm.
pick me up at a certain time. But technology is allowed for us to trust. So I think if there's some going to be the next, like if you go down that path, you'd have to
Hmm.
say that blockchain in real estate, or any application of the blockchain technology, will improve that level of trust, whatever it is, whether it's signatures, whether it's deeds, whether it's closing, whether it's inspections. All of it has to do with some level of being comfortable with it based on trust.
So what I'm hearing with blockchain is it's the level of not only transparency, but as of trust, and also just I would say a more effective infrastructure from then on in the later future. So
Yeah, I mean, if you want to talk about it more, just from just a um, like a data perspective, having
hmm.
something centralized versus decentralized, having, like I said, like behind the firewall, behind the sign-on,
Yeah.
that's to me is a centralized. Somebody is controlling that data, right? Like say, hey, this
Correct.
is my data. You can see it. You can't see it. Okay,
Hmm.
you can see it by license. But I think, if we're thinking like what the effects of a world where there's more transparency, then
Yeah.
it tells me that, yeah, we're working towards like a more decentralized place. And that's interesting to me, because then it shows us that we're trusting, more trusting. When you have a firewall, you think people are going to do something bad with that information.
Correct.
But if we put it out there, if everyone has it, then there's a level of trust that goes around. So to your point, yes, it's it's definitely in the next 5 or 10 years are going to be very interesting for like not only like real estate, but all the other industries that apply some of the blockchain technology.
Thank you for sharing all that. That's new information to me, and that's something I actually have to read upon. One of the questions I had, I know me and you both are both Asian Americans. I'm very
Hmm.
much born and raised in the Philippines, and then I came here for more opportunities. And so, can you talk a little bit more about the Asian American culture in both startups and real estate investing? I know it's not predominantly Filipinos, so
Yeah. So I can tell you, there's a little bit of. I wrote an article back in, gosh, an earlier part of this year that kind of touched upon this a little bit, and I'm sure I sent it to you, but I think the part that always gets me is that, sometimes I'll go into a room and they'll say, "Oh, great, the finance guy is here." Right.
correct.
So there's that little bit of that stereotype, and or but sometimes I use it to my advantage too, because I do have a little bit of a finance background, and
Yeah,
I can kind of wear that hat sometimes. So I think, like in my article, I said that not all stereotypes are negative, and I say this like with an asterisk, because I say that because sometimes some of your bias allows for you to make a better decision on certain things. But I'll tell you that the culture itself, in like startup culture,
Hmm.
Um, I would say there's no problem being like Asian American and like I like being like born in another country and coming to the US for an opportunity. That story in itself is a story that many people not, and that's not just exclusive to Asians. It's essentially that there are a lot of different ethnicities that have like, you know, that are weren't born in the US and have done very well in the US. The like the angel investing like that concept, I think for them, Asian Americans, it's a little bit new because again, it's like an asset type that they're not knowledgeable about. So
Right.
that breaks the point of just like educating. It's just the same thing of, you know, for a long time, like if you looked at what Robinhood did for investments over the last 4 or 5 years,
Right.
they've kind of democratized and gamified the investing space.
Yep.
So where traditionally you were going to places like Fidelity or Charles Schwab or
Hmm.
Vanguard, and there was like not only like nomenclature that you might not be familiar with, or charts that you might not be familiar with, or addendums that you might not be comfortable reading. Now you have an application that allows for people to kind of understand it in a very simple way, like just
Correct.
like so that they can make a decision on whether or not they're going to invest in this particular company.
Hmm.
To me, that's what's needed in whatever anytime you have some kind of new asset type. So, you know, Asian Americans, I'll say this, and because I'm tend to be biased, I tend to think that we're very curious about certain things. So
Right.
I'm very curious about different things. So I read a lot, I research a lot, and I
Hmm.
think that in our nature allows for us to not only do well in the startup culture, but also do well in the kind of in the investment culture, as long as like there's, you know, they want to, they're accredited, and you know they have a that passion to kind of really dig and see what they're investing in.
Wow. I'm personally am curious of like everything else. I try to dig deep, read articles. Most of the time, I watch YouTube videos because I'm more of a visual learner
Sure,
and
sure, I'm
a
like that
listener.
too. Yeah.
But for startup angel investors that want to be more educated in diversifying in real estate, how can I do that? Or do you know of any paths currently
I mean,
aside from like
yeah,
searching up
I mean,
Investopedia?
sure, sure. I
Mhm.
mean, I'm obviously like online. You know, the challenges with like going online is there's so much out there, so you
Yeah,
kind of have to like determine what's good and what's not. Um,
correct.
I think, you know, if you find somebody that you're comfortable listening to, I mean, I'm not gonna say them. You can follow me on Twitter. You can follow me on LinkedIn. I put
Yep.
out some good information about like different types of investments out there.
Mhm.
But there's a lot of great people that are trying to democratize, you know, this asset class. And
Correct.
so I've, you know, Jason Calacanis, who was
Yep.
you know, early in Calm, early in Uber.
Yep.
You know, there's a number of great people that have podcasts just like yours
Yeah.
that are trying to kind of break the barrier.
Yep.
And because it like for a long time, and I mentioned this earlier, is that there was um, this separation of classes. Like if you weren't, you know, upper middle class or upper class, you didn't have the knowledge base, or just, you know, you weren't told or directed to look for these types of investments.
Right.
But you know, if to me, democratizing this asset class is very important because it allows for people to, again, like really type into their, or like go into their curiosities, and
Mhm.
also help founders and build innovations that could be the next Redfin of the future, the next Uber of the future, you know, the next you know, next Airbnb of the future. I
Yeah.
represented Travis Kalanick.
Okay.
I helped him buy a house, the
Wow.
former CEO of Uber, back in
Mhm.
2007, and it was before Uber, before he
Yeah.
founded Uber. And regular guy, nice guy, and he had just sold a company, and he bought a place in the city. And I just think about like you never know like what what a person can do.
Mhm.
And you never know who you're going to come across. So I think just like when you're looking and identifying companies to invest in, it's about the people, that the founders that are there, and then the communities that they affect, and that's what I look for. So like, you know, great founders, you know, that are investing in building communities, and building communities in a sense like, you know, the millions of Uber drivers, or the millions of people that are delivering food, or the millions of people that are subletting their house to strangers.
Correct.
Those are the kinds of like new businesses that we like to look at, and that we're very interested in investing in. I see all the time, not only just like private equity tech companies, but I
Hmm.
also see a lot of syndicates, like real estate syndicates that are looking to do affordable housing, or one of the ones that looked at recently was storage, where people were building storage units for Amazon out on the East Coast, or modular homes, and they're all built in that same concept of, it's all built within real estate. They're all trying to do something better, either by solving the housing crisis, or to make it less expensive for us, when we're buying our Uber packages, to make sure that things don't get lost.
Yeah, yeah, yeah. Good point. Good
Our
point.
Amazon package. Yep.
This really revolves around the question of um, what would be your 2 cents for, or any advice for angel investors in regards to any industry, startups, or real estate investing?
Um, so I would say it's a good question. If I just had like 2 points, I
Yeah,
think one thing is like absolutely, like, educate yourself on the
asset types.
nomenclature, like, or
Hmm.
the asset types, like how it operates. So there's some great books out there on private equity. There's some great books on real estate syndicates that are out there too, that
Hmm.
that I've read. And then start looking at different opportunities. So the part that'll make any angel investor unique is how
Hmm.
well they're able to decipher whether or not this particular investment is going to be
Is a deal
successful.
or not?
And
Correct.
it's not a, I mean, I would say it's hit or miss. Like a lot of failures. You hope that you're going to have more successes than failures, but the
Correct.
reality is like 90%, a very high percentage of companies that start are not going to do well. And even projects like real estate syndicates, um, there's a high probability they don't do well.
Correct.
It's just, that's this kind of the nature of the beast. So I would say educate yourself. That would be my first, like the 1 cent concept, like as much as you can to
Yeah.
understand it, and then look at as many deals as you can. So like in my first year of investing, like officially, I looked at over 112 investments, 111 investments.
Wow.
I ended up making 11 investments that year. But my point was to look as much as I could. Now I
Yeah.
meet other VCs in the private equity space that have been doing it for decades,
Hmm.
like 20 years, 30 years, and they're in the realm of 1,000 to 2,000 to 3,000 deals viewing a year.
Wow.
And so if you think about it, it's absolutely like a percentage of success. If you see more deals, then there's a higher probability that you're going to find something in that pile versus a smaller pile.
Yeah.
So being able to look at as many deals as you can, not only educate yourself, but you also are able to meet a lot of great founders. You get
Yeah.
to also tap into that detail of being curious.
Hmm.
You can kind of learn about different industries. Like I only do prop tech, fintech, and real estate tech, but what comes across my desk a lot are things like biotech,
Yeah.
or recently a lot of AI stuff. I see a
Hmm.
lot of machine learning or artificial intelligence, automation, like robotics. So
Hmm.
again, not my wheelhouse, but I'll absolutely take the call and do the Zoom call. I'll do the meetup, so I can learn a little bit about what they're doing, and then hopefully, if I can provide some insight, whether it's like time, money, or resources, then I'll do my best.
Awesome. Awesome. To me, it sounds like educate, be curious, educate, and then look at deals or deal flow.
Yeah,
So,
deal flow is key. Yeah, I would say so. Yeah.
yep. And we're coming to a close here. So, how can people learn about you? Twitter?
Yeah. So, one of the things about like nowadays in like 2021, like people are very accessible. So, just like how you found me on LinkedIn, you can
Yep.
find me on Twitter. I'm pretty active on both Twitter and on LinkedIn.
Yep.
And if you're a founder, you're in a space in our wheelhouse, prop tech, fintech, real estate tech, and you have a little bit of traction, you have a little bit of revenue. We want to talk to you.
Uh,
The nice thing about what I've been doing in our practice is that I have access to a number of different larger organizations. So not only am I advising like 7 other real estate tech companies currently,
Mhm.
but I also serve on a number of advisory boards. So I sit on the advisory board, the executive council at the University of San Francisco. I'm a
Yeah.
guest lecturer there. In addition to that, I also an ambassador to Realtor.com. So there's like a number of organizations that I help that can provide insight for a lot of
Yeah.
these companies, whether it's academic or whether it's in the private or the public markets. There's a lot of different things that we offer, and so that's kind of the easiest way to find us is like on Twitter or LinkedIn.
Right. I'll leave the Twitter handle and LinkedIn
Yeah, that's
handle in
perfect.
the
Perfect. Perfect.
description below, but it's also
Perfect.
here if you ever are seeing this in video form. But otherwise, thank you very much for being on the Startup REI show, the #1 real estate investing show for startup angel investors.
Hey, you got to give a shout out to your sister. The sign up on the wall.
Oh, I will. I will. It's a good reminder that we're always a kid, even though we're all of
True.
age.
That's
So
right. That's
thank
right.
you very much. I will end the stream now.